Yeah, great. Hi there. So I'm Ari Rodriguez, Cassandra.eth online, and I'm the CTO and founder of Arrakis Finance. What we do is mostly build on-chain infrastructure to help liquidity providers provide liquidity to decentralized exchanges in more efficient, more sophisticated, more interesting ways. This talk, though, is about looking forward about the future of market making, specifically about the world we live in today with centralized market makers, many of them having often a very bad stigma, at least in our space, and how we can reduce this bad stigma and make market making more transparent and trustless in the future with DeFi. So let's get started. So yeah, to give this talk a little bit of motivation, I'm sure many of you have heard of these companies up here, or I suppose X-companies, and they were major market makers in the crypto space, and potentially, seems likely we're doing some very shady things behind the scenes, and crashed and burned in different manners. So I think for those people in the audience around here who have ever worked to have liquidity goals for some crypto token, trying to get a token listed on a centralized exchange, if you've ever interacted with any traditional market makers in traditional finance, oh my God, my dad is going to be telegramming me in the upper corner there, so enjoy that. I think you will have noticed that it's not a great relationship, or I think protocols often have problems with these centralized market-making actors. So I think first of all, to talk about traditional market-making and traditional finance, there's just some limitations about how traditional finance works, which makes all market makers entirely custodial and fully trusted, right? So if you have assets, if you have some inventory in a couple of tokens, and you would like to make a certain market liquid via a central traditional market maker, you hand over those assets, they have custody of them, and you can't limit what they do with them. Maybe you can try, you can make legal agreements, but basically they are the custodians of these assets and they do what they like with them, including sometimes maybe secretly using them as collateral for getting loans for themselves, things like this that you might not want the market maker to be doing. So, right, with crypto, with smart contracts, already we can at least use smart contracts to more tightly define what it is that the manager of these assets, the one who you want to be placing orders in the book to make the market liquid, but is not the owner of them, what they can do. So you can make this less custodial. But so that they're fully trusted and custodial, they take your money and they say, we promise we'll make the market liquid for you on some exchange or some exchanges. It's also very intransparent. You don't know how they are making the market. You don't know which orders they're placing in these exchanges and whether they're even filling orders. Sometimes you can see centralized actors will place orders so that it looks like there is liquidity in the book, but they don't actually want to trade, so they don't facilitate any trades. They'll cancel all their orders whenever a real trader arrives who wants to be a taker, and they don't want to actually make the market. And so you're basically giving these tokens over to market makers to do nothing for you or paint pretty pictures on the chart. Lastly, I think, to me those are the biggest and most important difficulties what protocols have when they try to work with a traditional market maker. Finally, I think there's a very, very high switching cost because of the tremendous social coordination that's needed between the market-making partner and the inventory provider. So very unlikely that you'll have an easy time, switching and saying, I don't like this market maker, I want to work with a different one. Often it's very costly, and worst of all, you don't know what you're paying for because you don't know exactly what they're doing. So, Hopefully that provides a little bit of the idea of, I think, again, if you've ever worked with a traditional market maker, you might know about some of these pain points. But I think it's very important that even though market makers can have this bad stigma, sometimes a shady stigma, nobody knows what they're doing, and they have the ability to manipulate these markets, and maybe they're doing that. It's important to remember that market making is a good thing. It's good for all of us. We want these markets to be more liquid and more mature. And if people want the ability to buy and trade different assets, you need market makers, right? There will be major coordination failures if every time you wanted to trade anything, you needed to find a buyer yourself and call them up and coordinate this. So in traditional finance, market makers provide bids and offers on a certain asset pair. And in crypto, we have been trying to solve this problem, and we have something called automated market makers, which I'm sure most of you have already heard about. So in an automated market maker, the inventory providers don't place that inventory in bid and ask orders around the current spot price. They actually place their inventory across a price range, or in the case of UniswapV3 style decentralized exchanges, which most people are familiar with as the classical model of the decentralized exchange, they provide these assets over an infinite set of prices. And so traders can trade, and the price automatically, algorithmically updates. Thus, you have an automated market maker. And you'd think maybe we've already solved this problem, but we'll talk about why just a simple automated market maker smart contract might not be enough to rival traditional market makers and actually be efficient enough to make markets liquid. But it's very important to know that without infrastructure like this, without these hedge funds and traditional financial companies providing these bids and offers in these centralized exchanges, or without these liquidity providers into automated market makers, you don't have liquid markets. You can't trade assets. So we need market making. It's a good thing for both sides of the market. However, I think the major issue that we noticed with the original designs for the automated market makers that we have, which had a flowering explosion of I think use and proliferation and understanding from the community. However, the automated market maker is not efficient, especially the traditional ones that we had a few years ago were not very efficient at routing trades, at providing good pricing for people who wanted to trade assets. A traditional financial market maker can be extremely efficient, placing bids and placing orders on both sides of the price to help people trade the assets they want to trade, and giving them really good price execution, constantly updating these prices to make the market extremely efficient. So basically we have this trade-off today, which is you can work with a more traditional type structure, you have a very efficient market, or you can have a trustless market making activity going on with these inventory providers providing liquidity to these decentralized exchanges. The only problem is the pricing is really inefficient. You leave a lot of value gets extracted in MEV by arbitrageurs. Also, the spot pricing is simply not nearly as good as what you can have by someone who can rearrange the orders in these central limit order books at very small time frames. So this is where we finally get to what we do at Arrakis Finance, which is we're working on top of Uniswap version 3 to basically try to reach something like the best of both worlds. Have the efficiency of a traditional financial market maker, but on top of automated market making infrastructure, on top of smart contracts, entirely trustless, entirely transparent. This is what we're hoping to achieve at Arrakis, and where we think potentially on-chain trading and market making is headed. So how can you actually do this? I think before we get there, I'm going to go on a tiny bit of a tangent. I'll try to go fast here. But decentralized exchanges have been going through a major evolution. I think most people's mental model for a decentralized exchange, for an automated market maker, is the classical x times y equals k constant function market maker, or even the full class of constant function market makers like Curve Finance is also just, it has a different constant function, but the same idea. The contract can update the pricing for orders coming in based on preserving some constant function. The price updates as a trader trades, always on that constant function. Now, the biggest, I think, what cracked things open in the decentralized exchange space was the introduction of UniswapV3 and the idea of concentrated liquidity, which allows us to create any sort of liquidity distribution in a much more flexible way. And just to really briefly talk about it, what you can do is you set a position, which now, when you provide assets to the automated market maker smart contract, you no longer provide your assets across the entire price range, but you actually get to decide across which price range will your assets be traded, which can be in some certain band. And beyond that, I think we see a lot more coming. This sort of opened up the problem space of how do we make automated market makers more efficient, and we see a lot of new ideas beyond UniswapV3 as well. So I think while most people's mental model for the decentralized exchange is still probably something like a Uniswap V2, I think the world of on-chain trading and liquidity providing is quickly getting more sophisticated and updating. So now, since Arrakis is built entirely on Uniswap V3, and so to understand how we will make truly trustless and truly efficient market making happen on top of this DEX, we have to talk about how the DEX works. So I see Uniswap V3 as kind of like a liquidity computer. It's the interesting thing that happens when you allow there to be concentrated liquidity is that each liquidity provider provides liquidity evenly across some price range for a specific token pair on a specific fee tier. We won't talk much about the fee tiers here, but this is what we'll define as a position, what the Uniswap smart contracts define as a position. What's really cool about UniV3 is it can efficiently on-chain aggregate all of these overlapping positions where each position provides liquidity over a different price range to create an overall liquidity distribution for that market. And what was like the 0-to-1 change between earlier decentralized exchanges and this new model is that now every single market can have a custom liquidity distribution that fits that specific trading pair. And if you have this, you can now start to approach the kind of efficiency we have in central limited order books in traditional finance. So the last thing that I find very important here is that I think that these single price band positions are actually a very low level primitive. They're almost like, I would say, like the assembly language of Uniswap's general purpose liquidity computer. I believe that we should be looking in general, when you think about Uniswap V3, one liquidity provider is not necessarily one position, right? You might want a certain liquidity distribution in the market, and the way you would do this is by creating a pattern of these positions, right? And so in my view, I think right now, again, the mental model is maybe a little bit coarse-grained in how we can even utilize this Uniswap V3 DEX. So, given all of this, I want to tell you about Arrakis V2, which I think can be the basis for truly trustless market-making infrastructure that's both efficient and transparent. So what we build with Arrakis V2 is a set of smart contracts which is somehow a middleware for you as a Uniswap V3 liquidity provider. It allows you to, with a very simple set of interfaces, track a collection of Uniswap V3 positions on the same token pair, even across fee tiers. So you can, for instance, if you've ever been a liquidity provider on UniV3 and you would try to do this by yourself just using the basic interfaces and the UI, you'd be tracking a couple of different UniswapV3 NFTs. Each one would be earning its own fees, which you might want to harvest and then put into new positions. You might want to update these positions, and you have to burn the NFTs and create new ones. With Arrakis V2, you can track all of this collection of these positions in one contract, see the sort of total holistic view of this multi-position that you have, and with a nice interface, completely reposition or redistribute your inventory into and out of the Uniswap V3 market. So you can kind of think of Arrakis V2 as like a proxy wallet for a specific token pair that you use for interacting with Uniswap V3, which will give you, a lot of convenience, gas efficiency gains in terms of you'll save a lot of gas using these interfaces rather than the others, and the ability, I think, a much more streamlined ability to automate what you're doing as a liquidity provider if you want to have a dynamic strategy. So, I would say one last thing that's quite important about what you can do with Arrakis V2 is you can actually leave assets on the side. So all the assets that are in your Arrakis V2 vault don't necessarily need to be in Uniswap, which can be useful for managing your inventory. Sometimes you want to place a very concentrated order, but not with all of your assets, with a small piece of your assets. Last, I think, really useful benefit of using Arrakis V2 is if you want to rebalance the inventory that you currently have. Let's say I have a few positions on the ETH USDC pair, one between a position between $500 ETH and $5,000 ETH, and a more concentrated one between $1,000 ETH and $2,000 ETH. So I've got some USDC and ETH in the Uniswap market. Maybe I've earned some fees, and now I want to rebalance this. I want to take all of that out, swap everything for ETH, and then put a single ETH order at 2,000. So I have entirely ETH now, and I place it at a strike price of 2,000, so that when the Uniswap market starts trading above 2,000, I'll sell all my ETH at $2,000. Let's say this is my strategy for some reason. Well, when you want to do this kind of rebalancing, you also need to swap. This means I need to swap some of the USDC in my holdings in my vault for ETH. So what's really great about what you can do with Arrakis V2 is you have this low-level interface for swapping, so that you can source liquidity not just from Uniswap, but from any other exchange, or even some sort of custom smart contract, which would deal with a primary market of your token. If, let's say, there were ways to sort of generate or wrap and unwrap it on some other primary market. So I think these are the benefits of using an Arrakis V2 vault, even for yourself as just a personal liquidity manager. If you want to, if you will be placing multiple liquidity positions on the same token pair, you will eventually be saving a lot of money in gas just by providing liquidity through Arrakis V2. And here, there's nothing public, right? This is just your private proxy wallet vault for interacting with Uniswap V3 on that token pair. You can also use Arrakis V2 in a public setting, since we also ERC20 tokenize the entire position. So in that way, you can aggregate liquidity from many different sources. Everyone who provides assets to the vault gets an ERC20, which represents their fractional position of that vault. And then all of the inventory in that vault can all conform to the same strategy. And this is also quite an interesting setting. So that's what you can do with Arrakis V2. And the first, you can, again, because it's entirely neutral smart contract infrastructure, you can build on top of Arrakis V2 and build whatever you would like. But we at Arrakis are building, the first product that we've built on top of our V2 system is what we are calling PALM, Arrakis PALM, which stands for Protocol Automated Liquidity Management. And I think it's important to give the context of, I would think of this as coming from sort of the next step of protocol-owned liquidity. So if you've heard of POL, protocol-owned liquidity, PALM takes that idea and extends it, because if you're a protocol that owns assets and wants to deploy them as liquidity into the market, maybe you'd like to do that more efficiently. But maybe you don't have someone in your team or you don't want to have to trust somebody to constantly be the one to manage the protocol-owned liquidity, to place it in the right kind of price band so that it efficiently routes trades. So the idea of Arrakis Palm is to allow protocols to basically provide, let's say they have a treasury, they have some inventory they want to inject into the Uniswap market. They can use Arrakis Palm to provide that inventory into Uniswap via our Arrakis contracts. They can set the sort of strategy flavor they would like to use and also set some custom parameters to the strategy, the market making strategy they would like to utilize. We'll talk about what these strategies might look like in a second. But once the protocol does this, they can now simply look at see the metrics and a dashboard, which lets them see exactly how the automated strategy is running, how it moves liquidity in the Uniswap order book, and it'll simply run automatically with a keeper system that the keepers are running some code in the background, which is taking the strategy parameters that the protocol set on chain and using that to constantly monitor and check the chain. If it's time to rebalance, it'll send a transaction and rebalance the inventory. But the very interesting thing is that because of how this Arrakis V2 Vault works, you can set who the manager is, but you can tightly define what that manager can do. So even though these keepers are the one who are actually moving liquidity in and out of Uniswap v3, this is the only thing that they can do. They are not the custodians of your assets, and you have the ability to basically define exactly how tight or how loose you want to constrain the manager. And again, no switching costs now. If you decide whatever system is doing the management of the assets in your inventory, you can change this manager address and thus immediately switch from one market maker to another. So the switching costs go down almost to zero. So yeah, basically Arrakis Palm is permissionless, active, automated LP strategies for anybody. The vault owner assigns the manager, deposits and withdraws funds, decides on the strategy that they'd like to use, the strategy type, and the custom parameters to that strategy. What can the vault manager do? The vault manager can only execute the agreed upon market making strategy. If the vault owner would like, they could delegate the setting or tuning of these strategy parameters to another third party, to the manager themselves. But then, of course, you're adding some trust to the manager, since now the manager gets to decide exactly how your market making strategy will work. So to me, the future of market making is permissionless. It's automated and customizable. There are low switching costs. You're not putting the manager of the funds in total custody of them, and it's entirely transparent. You can see exactly what these automated executions are doing in real time, see how your liquidity is being utilized, unlike this very intransparent centralized market maker who simply says, I promise to you, I'm routing orders in the central limit order book. Here you can actually see how much volume is going through, and etc. Thanks to the power of permissionless, transparent blockchains, right? So I'm already over time, so thanks so much for coming. I'm Cassandra.eth. You can follow me on Twitter, follow Arrakis.finance. If you are a protocol looking to automate the management of your liquidity or bootstrap liquidity for your tokens, certainly come talk to us and check us out. And if you'd like some really beautiful Arrakis socks, thank you so much for being here and listening to my talk. So please come. If you're interested in some 100% cotton socks, we've got those for you. So you can come make a line over here. Thanks so much, guys.